You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, first day of October 2019. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. I'm going to put up a chart of the S&P 500 E-mini Futures. Here we go. Try that again. Ooh. What have we here? Okay, a rapidly declining market. Yeah, can I help you?
I don't know if it's just me, but...
What's just you?
Dwayne, I think...
What's the problem?
Your mic is off.
No. No, it's not off.
No, it's me too.
Okay, yeah, so...
I'll text him.
Yeah, he must be having technical difficulties.
Good afternoon.
There he is.
Welcome back.
Okay.
All right.
Good deal.
Today is Tuesday, first day of October 2019. Thanks so much for joining us. I have a chart up of the S&P 500. If you can't see it, go to our homepage at cfrn.net. on the right-hand side, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. That'll give you one-click access to the show each and every day. On the days you're out of the office, away from your desktop, simply point the browser to youtube.com/CFRN/live. There you'll find a live real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. All right, this is a 30-minute chart. We can see we have a sell-off underway, as they call it. Let's look at a daily chart just real quick. Okay, now let's get some of this stuff off. That's a Fibonacci price projection to the upside, which doesn't look like we'll be needing that today. We were looking at it yesterday. So, come on, chart. There we go. My chart went light gray. That's never a good sign. All right, come on. All right, now we're good. Now we're cooking. Okay, so daily chart. The most recent significant swing low took place on August 6th. And the most recent swing high, which is not an all-time historic high, came really close, but no cigar. That was September 13th, which brings us to today, October the 1st. So we're looking right now at the swing low that was put in right there. In fact, let's do that a little differently. Let me get a price. All right, the low was 29.46 and a quarter. We're at 29.47 and a quarter. So we're a point off the swing low put in on Friday. Here's Tuesday. Here's Sunday night and Monday. Here's Friday. Now, where could we anticipate finding support below? There are two ways to go about this. We can look at this entire move, or we could look at just the last leg up. For the purpose of this discussion, we're going to look at this entire move here, from the low up to that swing high. 38% Fibonacci retracement just below us at 29.3124. Again, current price, we're at 29.47 and a quarter swing low. 29.47 and a quarter at 31 and a quarter. We have a 38% Fibonacci retracement. We've already passed through the 24% fib. That's the shallowest fib number. Now, here, look what happened. When we hit that 24, it did act as good support. We would anticipate that, especially on a daily chart. We were not only at a 24% fib there, but if you look here, you can see that price held in this area. This area acted as good support, Here, it was good support part of the session. You'll notice we opened here, ran up here, good support. But then when we came back to test, it failed, and that led us to the most recent significant swing low on this chart. When we get back up to this area, support, 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 resistance. 4, 1, 2, 3, 3.5 trading sessions. We then make the move to challenge the all-time historic high. We did not take it out. So we have support, 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 resistance, and then support for 1, 2, 3, 4, 5 trading sessions. Today, this would be the day that broke the camel's back, but I assure you no camels were harmed in the filming of this video. Now, just as I drew this little rectangle here, showing this to be a significant price or an important price, important area, let's do the same thing across these tops right here. And remember, when these swing highs were put in, this 38% fib did not exist. In order for this 38% fib to exist, we had to go through that area and put in a swing high. You draw from the swing low to the swing high. Now we can see clearly. We can now see clearly, and I'm going to stretch your imagination here. We can now see clearly what the market already understood, that this was indeed an important price and an important area. So we're just going to go right across the tops of those candles, stretch it across. So we've got a 38% Fibonacci retracement. We've also got a significant area where, just based on how markets work, technical analysis 101 if you will, we should catch a very nice bounce if in fact we make it to this 38% fib. Let's layer one more thing in. Must be moving a lot of volume through there. There we go. Finally. And we'll wait a second for it to show up. Okay. Now, over the last 5 trading sessions, as we were finding good support at the area, at the 24% fib, the BBC, it rose up to meet price, and you can see we went sideways. Now, we were below the BBC and above, and we were below and above, and we were above and below, and then we were above, and now we're back below. Notice every one of these candles still connected to the BBC, still touching it. And so, from a daily perspective, we have not had a high probability trade setup. We've got support below us, and then this red and falling CFMA1, that represents good resistance. Okay. As we touched that red and falling CFMA1, you see what happened on the next daily candle. Now, we can say that price, we can see it. Price is trying to get to this important price, important area below. Will it happen today? Could. In the afternoon session? Maybe. During the radio show? It could happen. But that's, we know what the market is trying to do. Now, once price gets there, it will have to make up its mind, take an inventory of buyers and sellers in the order flow to determine what the next move will be. If there are enough buyers to overwhelm the sellers, then the bounce could turn into a reversal. If there are more sellers than buyers in the order flow, we could visit this 50% Fibonacci retracement. And then look at what we have right in the middle there, between the 38 and the 50, bullish cross on the daily chart. Now remember, over here, I pointed out that this was good support, good support, good support. It's also, that's why the arrow's here, it's also where we caught a bearish cross. So that's going to be significant when price comes back to that area. And it was for 1, 2, 3, 4, 5 trading sessions. Okay. If we get to the 38, catch a bounce that doesn't turn into a reversal, we just pull up to the BBC and then start to put in another leg to the downside. When we hit this area, we would expect that to provide a bounce, to act as good support, possibly a launching spot for a reversal. So the order of the day will be to take advantage of any trading opportunities on the short side until we get to this area. Price firms up. We'll then have opportunities on the long side until we can determine if the market is going to attempt to go back and challenge these highs, or if it's going to take a deeper retracement, which will give us the opportunity for more trades on the short side down into this area. On a daily, look at the size of some of these daily candles. Could we hit this, and hit this all in one session? We could. We've got the 50% fib, which is very important for those who do fibs and understand fibs. And if you don't do fibs or don't understand fibs, please don't spend $20,000 on software that will calculate for you what your free software that comes with your trading platform will do. It'll do the same thing. You just need me to show you how, and I'll be happy to book a mentoring session. Just see Val 949-42 Emini, or send us an email, support@cfrn.net. So we could come down, we could spike this thing, touch the 50. We satisfy the need to revisit this area. We get a 50% Fibonacci retracement. That's all very fertile ground for not only a bounce, not only a rally, but potentially a reversal that takes us back to challenge the highs. All right, we'll continue with the Concierge Trade Alerts and logic and all of that here in just a few minutes, but Michael is going to come give us a recap of what happened in the live training room today. But first, let me give you numbers from around the world. These are the cash markets. Currently here in the U.S., Dow is down 285 points, a little over 1%. NASDAQ is down 61. S&P 500 down 28. And the Russell 2000 down 9.5. In the commodity basket, crude oil down 79 cents, trading 53.28 last. That's a drop of about 1.5%. Gold, go gold, rallying today, up $18.10, trading 14.91 last, and that's a gain of about 1.25%. In the Asian markets at the close, Nikkei was up 129 points, Shanghai was down 26, and the Hang Seng posted a gain of 137 points. No movers, no shakers in that bunch. All right, European markets at the close, FTSE down 47 points, DAX down 164, and the CAC dropped 80. Now for the CAC, that's a drop of 1.5%. And for the DAX, it's a little over 1.25%. That gives us a mixed day in Asia, a red day in the UK, and so far it is a big red Radio Tuesday here in the US of A. Let's go to Michael, get that recap of what happened in the live training room, and I'll be back with answers to your questions, a chat with John, and much, much more. Take it away, Michael.
All right, here we go. Coming over here. There.
All righty,
All
it's
right.
all yours.
Okay, thanks. I got it. Man, I just want to see who all is in here right now. Okay, here we go. Oops, here we go. This one. If you have, well, good afternoon, everyone. Today is Tuesday, the first day of October 2019. If you have not taken a free trial with us and you want to take a free trial with us, go to the homepage at CFRN.net. Right over here in the right-hand column, it says apply.cfrn.net. If you click on that, you'll be brought to this page where all we ask for is your name, your email, your phone number, and you can tell us your biggest trading challenge so we can tailor one-on-one training specifically for you. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, well, we don't know that you took the free trial. Okay, so you got to click on that confirmation link. Yeah, recaps. Today is the first day of the month. We ended last month $3,663. So over 19 days, averaging $192 a day. Today is the first day of October. if you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today we made 14 ticks in the euro, 4 ticks in gold, and 4 ticks on the ES. Put us at plus 177 this morning. Today took 31 minutes and 3 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 11 trades this morning. So on the month now, we're at 177.50. That's over 1 day, averaging 177.50. On the year now, we're at $28,608. That's over 176 days, averaging 162.55. That's one contract, 2 hours per day. One contract, 2 hours per day. Yeah. Okay, so let's get into what happened today. I was expecting crude to either have a big move up or a big move down today because it just gave absolutely nothing in the morning session. Absolutely nothing in the morning session. Gold. Let's look at the gold. We had 5 gold trades, I think. Now, when the news came out at 10 o'clock, the markets just went wacky. But leading up to that, there was 1 gold trade right here that I missed this morning. And then when 10 o'clock came out, the markets just started bouncing all over the place. So I waited a little while, and then we started trading it. And right here, we got 2 ticks on the first one. Come on, keep going. All right, there it is. We got a break even there. We missed a long trade there that would have been profitable. Then we stopped out here to put us at -6. Then right here we picked up 10 ticks to put us at +4. And that was where we ended the morning session on gold, I guess. We had a break even right there. There was one more bounce off the BBC right here that I didn't get filled on. That was toward the end. And then getting into the break, it got really choppy in here. You had to wait until you had a lower swing or a higher swing, whichever direction. And it ended up being a higher swing. So it would have been a long trade right there. Then it flipped around and started going short. So there would have been a short trade right here that would have been a break even. And now it's flipped around again and trying to go long. What I would look at here now is a close above that trend line. Okay, now we're testing the BBC here, so we could just get an up close as long as the cycle stays blue. That would be a long opportunity. Okay. All right, now let's look at the euro. The euro also went crazy when the news came out at 10 o'clock. Well, let's just start out right at the beginning here. Our first trade here on the euro, we picked up 8 ticks. Then on this one right here, we had 2 ticks locked in, but when the news came out, it just slipped me the 2 ticks, and then it just kept going up and was going crazy for a little while. But we picked up 2 more ticks here to put us at +12, and 2 more ticks here to put us at, that was +10, that was +12, and that was +14. Then right in here, we had a mistrade right there. That looks like it probably would have been break even. Another mistrade here that looks like it would have been break even. And then we get into the break, and it doesn't look like there was anything here during the break. So the euro, we ended up with +14 this morning. Okay, crude, as I said, we didn't end up with anything, but during the break, we didn't trade crude at all this morning. But during the break, there was some opportunity on crude, I think. Right here was a shorting opportunity on crude. And right here was another one. And that was pretty much it with the crude oil today. It's odd to say that we didn't have a single trade on crude. It's my favorite market. In the ES, we had just 1 trade that we did. And I will bring you back to that and show it to you. Right here. Got to bounce off the BBC. Now, this is when the news was happening too. And I jumped in, I picked up 4 ticks really quick, and that got us the goal for the day. And, it was moving around after that, but I wasn't doing anything with it. See, it seemed like every time there was a trade setup, the cycle would go up just a little bit too steep for me to want to jump in. And now we're getting into the break, and during the break, just look down here in the slingshot. You can see that there wasn't much opportunity. There was one trade right here that would have been a break even. And that was it for today. Now, excuse me. It is, well, first let me do the spreadsheet. If you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. Today we made 14 ticks in the euro, 4 ticks in gold, and 4 ticks on the ES. Today took 31 minutes and 3 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 11 trades. So on the day, we're up 177.50. Okay, now it's the first day of the month, so obviously it's going to be the average for the month. On the year, we're at 28,608. That's over 176 days, averaging 162 per day. Okay. Now, if you have not taken the free trial with us and you want to, go to the homepage here at CFRN.net. Right over here in the right-hand column, it says apply.cfrn.net. If you click on that, it will bring you to this page, eminitrainingschool.com. Here, all we ask for is your name, your email, and your phone number, and you can tell us your biggest trading challenge so we can tailor one-on-one training specifically for you. Hit the send button, and you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click on the confirmation link, we don't know that you took the free trial. Okay, now, the other thing that I was going to show you was this. It's the first week of the month, and usually on the first week of the month, there's a lot of news. So here it is for tomorrow. We have ADP non-farm employment change, crude oil inventories, and FOMC member Williams speaks. And really, it's another Chinese bank holiday. It's like 2 days in a row. They have a bank holiday. And observance of National Day. That was today, too. Right? Yeah, right here. It's a big holiday for them. And then Thursday, we have high impact news, a bunch of them. Wow. And Friday, hey, the Chinese finally go back to work. These are big news events Friday morning at 8:30 in the morning. Those are big things. So just pointing it out so you know. Okay, and with that, we can pass it back out to fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park, where Dwayne is currently residing, I think.
Yep.
Dwayne, if you are ready.
True story. Okay.
Okay.
All right. So here we are, where we left off. Recap of the recap.
Today, 31 minutes, 3 trades, $100 per contract.
That's a good bingo. Now, keep in mind, folks, that the live training room is only open 2 hours a day. So it's a 2-hour window. Our goal in the room is not just for you to piggyback trades off Michael's back, but your goal should be in the room to understand what he's doing. Because when he does something, he always explains it. He gives you a reason. Everything is quite logical once you understand how markets work and how our indicator set works hand in hand with the market. In fact, our indicators really have only one purpose, and that is when you unleash them on any market or any time frame. It could be corn, it could be the S&P, it could be a 1 minute, it could be a daily. The job is for the indicators to go in, detect the underlying rhythm of that market in that time frame, highlight it for you so that you can then employ our methodology or strategy, which will enable you to take trades that are high probability, low risk. So when you're in the room and Michael points out a move and he is executing and managing, nothing wrong with you trading along, but don't get so caught up in the trying to match him step for step, because there's always going to be a little bit of lag there. But let your focus be more on understanding what he does, and then make sure you grab a hold of why he does it. Because after a couple of weeks, our methodology is simple by design. So after a couple of weeks, you should be able to spot these setups on your own, away from the sound of his voice. In fact, after a couple of weeks, you should be putting yourself in that situation, trading away from the sound of his voice, in sim, of course, spotting the setups, executing, managing, exiting, because that's the fastest way to learn what you don't yet know. Again, while our methodology is very simple by design, very few moving parts. Each part is very important though. So if you miss, one of the few things that you really need to know, it's going to throw the whole thing off, and you're going to be frustrated. So spend a couple weeks listening to his voice, trading right alongside of him. You're in sim, of course. And then spend a couple hours a day, or whatever time you have available, and whatever time of day it might be, where you have to make the decisions yourself. Because when you're in the room and the charts are moving and he's talking and everybody's clicking, you never really know for sure if what you just did is because you knew that's what you were supposed to do, or you heard him say it, and so that slid the piece of the puzzle into place. So that just being away from his voice, the things you don't quite yet fully understand, they'll just rise right to the top. You jot them down. You repeat this process over another couple weeks. Pretty soon, you'll be seeing the market exactly how we see it, which will lead you to thinking about it the way we think about it. And then it will become second nature to do exactly what you see him do. If, however, you're just focused on, trying to get 2 points for the day, just trying to keep up with him and make every move he makes, number one, that's going to be a frustrating experience. And number two, you're not learning how to do it yourself. And I know that most of the folks in our audience have been around the block a time or two. And, well, you've probably seen a lot of stuff. Do you want to be dependent on these people, on these vendors, on these folks? Do you want to spend a life of dependency? Or do you want it to become a business where it's just you in the market, you in the chart, where you understand what you see? And I don't mean, okay, I see a red candle, then I see a green candle, I got a black squiggly line, oh, then there's a red and blue line. No, that's not what I mean. No, we want you to fully understand how markets work, what moves price, and when price moves in a certain way and reaches a certain price or area, what the next high probability thing is for the market to do. That's a whole lot less complicated, a whole lot less convoluted, and definitely a lot less expensive than many of the things that I've seen out there. Because you have to understand, if you become a client of any one of these services, and I'm not knocking anybody, I'm just telling you the truth about trading, which is why we decided to build something a little bit different. Okay? When you learn to fly solo, you cut off their income stream. If you're paying, $300, $400, $500 a month to sit in a room somewhere, not learning how to trade, just trying to, track the guy who's making it rain, the guy with the secret sauce. We want you to cook up your own secret sauce. We're going to share our recipe with you. Over time, you may build on that. You may expand or expound on it, but you don't have to. But it's really important that you learn the ingredients and how to bring them all together. And I'm going to show you a little bit of that right now. Let us go to the Concierge Trade Alerts. We started yesterday with Logic 247. Today we'll start with the Concierge. And Valerie sent me a midweek recap this morning right before the show. So let me share that with you. I have it on tap right here. Okay. Now we go to work 6 p.m. Eastern, Sunday night. We keep the pedal to the metal until Friday afternoon at 5 p.m. Eastern. So far this week, Sunday night, yesterday, and so far today, 22 alerts have been issued in Logic 247. Remember, there's two types of alerts. I'm going to break down the Concierge for you here in just a second. But I want you to keep this in the back of your mind because I'm going to tie it all up into a package here at the end. So far, week 61, which began Sunday night, 6 p.m. Eastern, 22 alerts have been issued. We're still waiting on the results of one. 20 found their target. One has been stopped out. So that's 5% of actionable alerts have been stopped out so far this week. Is that normal? No, it's not what I would call average. Average is what we've experienced over the past year, and that's 20% of Logic 247 alerts do get stopped out. Now, we're going to go talk to John right now. When we finish talking to John, I'm going to go through all of the Concierge Trade Alerts from last night. We cover 8 markets, the same 8 markets every night, so you'll get familiar with those. I'm going to break each one of those down, show you exactly what happened, how you could have dealt with it, or how you could deal with it if you're just getting signed up on the trial. John, welcome to the show.
Hi there. Thanks for the invite.
You betcha. Glad to have you.
Thanks. Glad to be here. So, look, I said yesterday the grains, it was the opinion the grains were set for a blast off. And they are substantially higher again today, especially the meal is up 7. I haven't seen a meal up 7 in a long time. So it's really, the fact that the meal is pulling ahead is very bullish indeed. And the grains, all the grains are acting well. Except for
soy
we
meal.
just pull back a little bit.
Hang on, John. Let me bring up that soy meal chart that you were just talking about. Okay. One word or two?
I think yesterday you put two in.
Did I?
Put two
Okay.
words. So I mean,
You got a great memory. I was thinking
Thanks.
that too. Soybean meal futures. Okay. That was it. I think I had it. All right. All right.
look at that. It's a much bigger move today. That's, and we talked about that. You know, sort of. I said, you know, what a great bottom is appeared to be shaping up.
You did. You sure did.
And this, I mean, this is a really textbook kind of a deal. And the other thing is this news came out this morning on manufacturing, sort of a negative PMI, worst since 2009. It probably sounds worse than it really is, but it is what it is. And that kind of tanked the market, and including the dollar as well. So, and then Trump put out a tweet saying he thinks the dollar's too strong. So one of these days that might resonate, and maybe, and certainly is resonating today. The dollar's down. It's not down a lot, but it's down enough to push gold up. A while ago, it was up almost 20.
Here's the dollar, John, on a daily chart.
Yeah, and you know, it's interesting. Each of these dollar reversals, they look pretty similar each time. See that?
Mm-hmm.
You know, go back to May. Yeah, go back to May, and almost everyone has been kind of hallmarked by that kind of a reversal. So the question is, it would appear to me that the dollar is diverging. In other words, it may actually be getting weaker as it's going higher because it hasn't been able to really get much. It hasn't really moved that much in the last few months. It's marginally higher. I think you'd agree. It's not really only 1%. It's probably like 1% higher than it was a few months ago. So it's not. So, is it going to break out and accelerate higher? It could do. You can't rule it out. It had a pretty good recovery from this last sell-off. On the other hand, you've got to be prepared for the possibility of a breakdown. It could come at any time. There's definitely some life coming into the currencies today. The Japanese yen in particular looks pretty strong. The Canadian dollar, the euro, the Swiss franc, etc. So I see
yen.
Yeah, that's probably a delayed chart because definitely the yen is higher today.
No, let me go. There we go. That's what you want to look at.
Yeah, and when you see that, I mean, that's a pretty big reversal.
This one's delayed, I think only by like 20 minutes, though.
Yeah. So, the dollar is definitely looking kind of weakish today. It looks like it's going to go further. And the euro, the British pound, sort of back up, which I think is a good sign. So,
here's the British pound.
Yeah. This would be a perfect place for the pound to reverse higher.
Mm-hmm.
And it's because it's a little bit like we've seen this before with the soybeans. There was a sort of an advance and then a pullback, and then an advance, and then it went wild. So you've got to be prepared for something like that to happen. And by the way, actually, if you just keep that S&P chart up for a second, because I was going to make a few comments.
Oh yeah. Hang on. Which one, John? The daily one I had up?
Yeah,
Okay, all right, because I want to look at this pound again in just a second, but let me go back to.
Okay.
I'm going to clean this up a little bit so you can actually see price. There we go. How about that?
Kind of interesting if you look at that chart going back to July through the summer. At the highs, the market was struggling to sort of go higher, and you had these doji. You see these dojis that featured each time that create. When the market.
Are you talking up here, John? Are you talking?
Well, there
where are you
and
at?
previously as well. How that little doji there, literally hallmarked the top back in August.
Right.
See that, and then we had the big plunge, and what's bothering me about this today is yesterday I said, look, if we break out, we could go higher. We did go up yesterday, and we went higher this morning or overnight. There was for some reason there was a big surge overnight, and then it just came in this morning and got knocked on the head. And what that means is, and it's more clear on the charts that I'm using, the downtrend. I think I mentioned this breaking out of the downtrend. It had to break out of the downtrend in order to go higher. It didn't do that. Now it's basically being repelled by the downtrend, and that's something to be very careful of in an emerging bear market or unfolding bear market. And I think this is a troubling development that's happened today because the market is really it's very weak. Just about everything is going down today. It's really a bad scene, frankly, and it makes me very, as I've been kind of cautious, as you know, for a while now, about being long this market. And so tomorrow is October the 2nd. It is a potential turn day, or later this week. So we could have a pullback. It would be very bad if we went down again tomorrow, because we are in October and there's no guarantees. It's just because we peaked last year in October the 2nd that we could bottom this year. The logic, it could be, look, this short term, this could be forgotten about tomorrow if some other news comes in that turns the market back up.
Well said.
Yeah, so you have to, you have to be kind of really nimble here. Again, we're at that support level. So in spite of the look, it's not uncharacteristic of this market when it's trying to make a bottom to test a number of times. It did it earlier on with the triple test before it rallied pretty strongly. If it was to negate, I mean, I think the key thing is the day this thing is negated and we go back over 3,000, then you probably got a pretty big deal going on with this market. You got a serious up move unfolding. So we'll have to just be prepared to go either way depending on what happens. But right now the bias seems to be to the downside. The VIXs are firming up a little bit. They're not running away today, which is possibly a little bit supportive of the market. But if you can go to the gold now,
You bet.
the gold did everything we expected it to do yesterday, except it didn't quite come down to 1450. But the fact that it didn't actually, I would consider to be a positive. And the gold stocks did make a low, a low yesterday, the lower low. But look at this. This is sort of setting up here as a perfect ABC. And given the range of this compared to the previous pullbacks, this is a potentially dynamic structure in the making here. If we really do remember, the surprises are on the upside in the bull market, and I think everybody was pretty surprised by the up move this morning, off a very weak opening, if you like. And the fact that how many times now we had moves since the bottom in gold, where we've shot up, very dramatically. Look at how many times that's happened since the 1290 low. You had that first one, took us up to about, had about a 40 move up over 3 days, $40 move, a little bit of consolidation followed by like a $70 move, and then a little consolidation. So, and then back in July, mid to late July, look at that big advance we had, and we had these big impulse waves, impulse waves unfolding. And I would say the same characteristic today. This thing just like suddenly took off and didn't look back. It's pulling back a little bit right now. The platinum is still a problem. It's really come back a lot. It's going lower for some reason. The palladium is still up in sort of record territory pretty much, and the copper is reversing today after being hit again. But I think the possibility of this gold literally having a huge new up leg that would take us to $1,800 is very real now, and that's what you want to be focusing on. And to give you the confidence, look, we've got to make sure we reverse today, and secure a reversal, if you like, so we have a legitimate reversal. But keep in mind, if it starts to look like this market's going to go higher, you knowing what we might actually be entering a stronger phase in the gold market over the next few months than what we saw in the past here. If this market's up on a day when the Chinese are basically celebrating their 70 years of the People's Republic, and they're AWOL today, and they're probably going to be AWOL all week, and the gold price goes up, I would consider that to be pretty bullish.
I'd very much like to see it turn here, in line with
Right.
what you're talking about, because the last thing I want to see is this get validated as a left shoulder, and then we start building a right shoulder, and that
Good
might
point.
not
Good point.
be.
Yeah, and look, there is it is a kind of a toppy formation, so you have to keep that in mind. But it is a classic kind of a three-wave pullback, and it's the same with the silver. They all look pretty good. So that's and the market is going down. So there's a lot of reasons why. But I think the Fed did another one of these repos this morning, about 55 billion or something. So they're pushing an awful lot of money into the system, and
I was gonna say, how long can they keep this up? But
Well,
that's
yeah,
just a silly question, because they'll just print the money,
Yeah.
loan it to the American people, and charge them interest.
Yeah. So,
Nice work if you can get it, I suppose.
Yeah. So, now you've got the grains pulling ahead. That's and remember, we talked about coffee and cocoa. Cocoa in particular is acting really well. So lumber even holding its own. Cotton picking up. So the CRB index is probably picking up as well, and that could support the gold price going higher. And again,
Do we have the
dollar,
CRB? Have we?
There's a few.
Yeah, there's a few different ones. Okay, I see that. Okay.
See, it's kind of reflecting that pullback in the gold, but if that's probably going to reverse up today, so it could be heading for a new high soon. This commodity index, especially if the grains take off. I think that's going to be, and they really are moving today. It looks like the situation's turned.
Here's soybeans.
Yeah, I mean, look at
two
this.
strong days back to back, and we're going to challenge these highs right here.
Yeah. As we said yesterday,
these are the highs we're challenging. I mean, there's plenty of room to run.
It looks very dynamic, and I think it looks like it's going to go higher, possibly, and it could, given the vacuum decline that we had before, this thing could easily be up to 10.5 before you know it.
I think a 50 to 75 cent move could be in the cards.
Yeah, and that's probably going to be pretty supportive of gold. And gold's actually picking up again after this little pullback just a short while ago. So let's look at the TBIX doing. See, look at that chart before you go on the gold. Look at that chart. I mean, boy, imagine if we start heading back up towards 1520, 1530, how bullish that thing is going to start looking. And it could mean, if you squeeze it up again, you could really have a kind of a parabolic, a strong vertical upward move from here.
Right.
That could really take it up towards 17, 18 and be very, very positive indeed.
Well, from this low to this high, a 100% Fibonacci price extension takes us up into that $1,700 range that you're talking about. Right,
and if we close the year anywhere around 1,800, it's probably implies that we're going to hit new highs sometime in the first or second quarter next year. And unfortunately, I just saw in a news report that one of these GOP senators is kind of backing the whistleblower or something. Even though it looks like a storm in a teacup, there's a few things that could go wrong with this impeachment thing. It could be detrimental to the market. Now that the market is kind of in a downtrend, there's more reason for the market to go down more if people start getting nervous about the political situation.
All right. You see this news out today on Charles Schwab?
No,
no more commissions on U.S. stock, ETF, and options trades.
Wow.
They have to compete with this Robinhood app, which that was its big thing when it debuted, was no commissions. How do they support their business model with no commissions?
If you look at the history of this Robinhood, they do stuff. They get paid quite big external fees for making markets and stuff like that. I forget how it works, but there's a way that they're making much more money from all the other attributes they have than actually the commissions. It's pretty amazing. But
stocks, ETFs, options, and cryptos all commission free, right from your phone or desktop. Who would have ever thought? But here it is. I noticed they've left futures out here. Well, it's Robinhood. They don't do futures.
I think they do, actually. I think they do.
Oh, do they?
Well, maybe they did and then they stopped it. I'm not sure. I don't think Schwab does it?
I didn't see it. I didn't see it when we were looking. Where was it? TD Ameritrade does futures now. And some people refer to TD Ameritrade as Thinkorswim. Thinkorswim is the platform that TD Ameritrade offers. But anybody that has an account there knows it's TD Ameritrade. Schwab fell 9% in pre-market trade today after the company said it's planning to drop commissions on U.S. stocks, ETFs, and options effective October 7th. The company said the decision to remove the final pricing barrier to investing online comes at the publication of Chuck Schwab's new book, Invested. Okay. So, yeah, I don't see futures. I should go to the Schwab site. Ameriprise Schwab. Okay. What we offer: investment products, mutual funds, ETFs, index funds and ETFs, stocks, bonds.
Futures. It says futures there, down the bottom.
You know, it sure does. I didn't see that. Futures traders deserve better. Get specialized tools and support for $1.50 per contract. Have you ever done business with Schwab?
No, I haven't.
No, I haven't either.
What?
Here you go. Emini S&P 500. NASDAQ, Russell. There's gold and crude currencies. Trade the mid cap. Trade the VIX.
They got everything there.
They got a pretty good
Yeah,
so how do you think this is going to affect smaller boutique brokerage firms? Are they going to become the horse and buggy, or is there still going to be a place for them in this world?
There's probably going to be a place for them, but this is pretty good news. You know? This is going to keep costs down with everybody.
I can only assume that the other big dogs are going to follow suit.
Yeah.
In an attempt to stay competitive.
Yeah, just picked up another couple of dollars on the gold, Dwayne. So it's looks like it's pretty strong. You know, that pullback didn't last very long. So
here we go. There's a 30-minute chart. That's a nice little pop there. That's 1 hour of production. We let's look at where we're going to potentially run into some resistance here on this move from the swing high to the swing low. We're approaching a 38% Fibonacci reverse fib. And
yeah, probably
we found
1495 might have a bit
there.
of resistance to start with.
Yeah.
But then once it gets through there, then your next is 1520, right back up to 1510, 1520. So.
Yeah, this 50% corresponds with this swing high, and then the 62. We had a lot of consolidation in that price, that area across there. So, folks, these are if gold stages a beautiful rally and takes us to prices like John was just talking about, along the way, price will have to overcome obstacles, and this does a real good job of highlighting where you may find those obstacles. In other words, we might just shoot right up into this area, stall out, consolidate a few days, a few weeks. But if the bull stays healthy, then we're off to challenge this area. And if we can take out 1520, goodness, we scoot right up to 1530, 1540 without too much effort.
Yeah. I mean, that is a really, really powerful breakout move today. And the fact that it's happening without the Chinese is a pretty big deal. So,
Now, when are they back to work?
I don't know, but
Michael was
probably
just
most
talking
of the
about
week.
that earlier.
Most of the week they're probably out. But imagine if this thing's back to 1520 or 1540, all of a sudden they've got to pay up. It could really change the potential. Let's have a look at the Canadian dollar, Dwayne. The Canadian looks very strong today too.
Okay,
They're
this
back
is
on
on a
Friday.
30-minute chart. They're back on Friday. Okay, thanks.
Yep.
So now, based on what happens while they're away, John, this is a stretch, of course, but I mean, do you see a lot of activity?
Could be a big week. Yeah.
Trying to play catch up, which just keeps pushing the carrot higher.
Yeah.
Okay, here's the
Let's look,
Canadian.
can you show us more history on that Canadian?
Yeah, let me put it on daily.
This may be the beginning of. It's kind of like a cup and handle deal, It sort of could be ready for a pretty strong move.
It looks like a pretty simple move from where we are up into this 762 area, and then if we can get above that and hold it on a pullback, well then overhead 765, 770. Let me put this on a continuous. More history. There we go. All right. There's swing low back in 2017. And swing high. Also, I mean, look how much this thing ran between June and September of 2017.
It's overdue for an upside move.
Yes.
So look at the Aussie dollar as well. Might be
6A. Let's do it this way. There we go.
Yeah, it could be.
It hasn't got the memo yet. But it's holding up. I mean, we've had now this is daily charts. We've had 1, 2, 3, 4 strong pushes down into this area, and prices held up each time.
Yeah, if it was the turn here, that'd probably be pretty good. But it's Aussie's different because I think that they're suffering from a lot of they haven't had a recession for 25 years, and maybe the currencies. There's a few things that are going upside down, including they're lowering rates, which might be affecting the currency as well. So, but everything else, the dollar's just starting to make new lows today. The dollar. So.
All right, John. Anything else you want to take a look
The
at?
market's hitting new lows. This market looks like it's going to have a bad down day today. So we'll see where we are tomorrow.
Guys, we're back on the daily chart of the S&P, and we highlighted this area. Remember, we weren't here yet, but we talked about it, and now we are here. So we have to see how price is going to respond. Let me throw these back up. Okay, there we go. Yeah, now I pointed out this area earlier where we had the bullish cross, folks, right here, sitting right at that 38% Fibonacci retracement on the daily chart. Let me just say it this way, rather than make a forecast, I'll be very surprised if we don't see 2920 on this move down. Maybe not in this session, but tonight and into tomorrow. I'll be surprised if we don't get there. What do you think, John? John already signed off. All right, let's go to the Concierge Trade Alerts. We'll start with the S&P. These are last week's weekly trading zones that you're looking at. And if you want to grab a screenshot, go ahead. Concierge Trade Alerts got out last night at 6:50 p.m. The Concierge is a static report that comes out once per session, good for the entire session, based on previous price behavior. Logic 247, which we were looking at a moment ago, that's around the clock as opportunity develops in the moment, real time. With Logic, you can get alerts at 2 a.m. or 2 p.m. because the futures markets trade around the clock from Sunday, 6 p.m. Eastern to Friday afternoon, 5 p.m. Eastern. There's an hour break every day so they can sweep, empty the ashtrays, and then 6 p.m. Eastern, back to start the new session. Today's Tuesday, but tonight at 6 p.m. Eastern, it becomes the Wednesday session. All right, got them? Okay. Logic is based on current price behavior, Concierge on previous price behavior. And when those two point at the same price, same area, that always deserves a second look. Consider being short the S&P 2967. There we go, 2967. A lot of volume churning through. This is volume. This is real-time volume figure down here in the bottom right-hand corner. Alexa, what's 2967 minus 2944?
2,967 minus 2,944 is 23.
Alexa, what's 23 times 50?
23 times 50 is 1,150.
Okay. So this is an $1,100 per contract move so far, $1,150 for the trader who's earned the right to trade 10 contracts. This is over a $10,000 move. Great way to spend your Tuesday morning, I suppose, right? Okay. Now, where's price headed? Where's it going? What's it trying to do? Or some would say, what's really going on? Right here, right now, we should see the market find support. Now, I'm basing that off of a current weekly trading zone. The zones you see on the chart are last week's. Now, we saw them perform beautifully Sunday night, yesterday. As we move into today, the new zones are starting to take hold and cement, and that will become the framework in which we trade in until the zones come out again next week. We've been publishing the weekly zones since December 14th of 2009. Our traders get them Monday morning, 6:15 a.m. Eastern, so they can get them on their charts before Wall Street wakes up, and they're ready to go for the week. Once we publish them, we don't change them, massage them, manipulate them, anything. They're carved in stone. I share them with the entire community on Thursday, but Monday, Tuesday, Wednesday, they are for the CFRN traders. So we're going to watch for support here at this area, 2942/43. See, I always manage to leak probably one out a day. So there you go. If we slice through 42.43, you know where that will take us? I'll show you. the very place we've been talking about. All right. So here's how it works. If you're one of our traders, when the Concierge Trade Alerts show up in your inbox, or when you grab them out of the Telegram channel, the private Telegram channel, go to your chart, put 2 lines on the chart. The long side, the short side. Okay? Now, these came out at 6:50 p.m. So let's take a look. Let's find 6:50 p.m. last night. That's going to be 1850, so I need to track down the 1830 candle. And it is right there. Okay. Now, so they come in, go to your chart. None of this has happened yet. Put a line across here, 2094. And then you put a line here. Remember, none of these candles have happened yet. This is when the report comes out, or came out last night. What this is saying, at 29.94 and above, you only want to be thinking about long trades. 29.67 and below, you only want to be thinking about short trades. Everything that happens in between is the market making up its mind which avenue it's going to pursue. And that's 100% dependent upon the order flow. Are there more buyers or more sellers? More buyers, price goes higher. More sellers, price goes lower. I know there's a million different instruments out there that you can use, and algorithms and whatnot, to measure and quantify, and I'm advancing and I'm declining, and okay. I mean, I'm not saying that doesn't work. I'm sure it does. It just seems really hard. We like to think we take the hard out of trading. We can't make it easy. We do make it simple. So this is our version of simple. No quants required, no algorithm needed, just 2 lines in the sand. We poked our head up. My friend Mike Reed used an analogy of the prairie dog when he was teaching, and in the book he wrote. If you know anything about prairie dogs, they live underground, and when they want to come out and frolic and do prairie dog stuff, they poke their head up out of the hole, they look around, they look to the left, they look to the right. If the coast is clear, then they come on out. If the coast isn't clear, if they detect a hostile environment, they duck right back down into that burrow and head in the other direction. Now, before they go too far, because see, there's a network of little tunnels underground, they might go, a few yards, a few hundred yards to another hole, poke their head up, look around, and if once again they find a hostile environment, they're going to go the other way. They're going to burrow deep, and this is what burrowing deep looks like on a futures chart. I can teach anyone how to draw 2 lines on a chart. I can. And you say, well, yeah, but I can't just trade with 2 lines on my chart. Well, we got a couple of other things, but they're simple too. Everything's simple by design, so it doesn't take you forever to learn how to do what we do. And what we do is fluid across all markets and all time frames, from pork bellies to E-mini futures, from a range chart to a volume chart, and every time chart in between. The exact same fundamental principle. Every market, every time frame. In each market and each time frame, you will find a unique underlying rhythm. Or better said, our indicators will find that rhythm for you and help you determine which side of the street you want to be on. I know you want to be on the profitable side of the street, but are you always able to tell which is which until after the fact? All indicators lag price, but you see price itself lags. These candlesticks are a reflection of decisions made by buyers and sellers in the past. Not the distant past, in the very near past. I mean, we're talking seconds. But that's still a lag, is it not? Every time this thing ticks, it's not because someone is making a decision, it's because someone just made a decision. A group of somebody's made some decisions. It goes through the exchange, winds its way down through your cable into your computer, and makes this candle come alive. Tick, tick, tick. Okay? Now, doesn't this look simple? It is. Again, simple by design. We've already dropped, we're still sitting at 42 and a quarter. All right, I gave you that zone, 42.43. So we'll see what price does here. What should happen is we should find good support. We should catch at least a bounce. And then if it gives way, we still have two more zones below us. Now today's only Tuesday, okay? We've dropped from 94 down to 44. We've dropped 50 points in this session. If you have questions, put them in the chat box. Nobody sees what you type but myself, Michael, Valerie. And we're not here to judge you. We're here to try to help. So if I say something that's not clear, if it doesn't make sense, or you just want to know more, put it in the chat box. Be happy to answer it for you. All right, let's jump over to the Dow. The S&P pays $50 per point. The Dow pays $5 per point. On any given day, if the S&P is up 10 points, the Dow will tend to be up 100. And vice versa. 10-to-1 ratio there. Reflected even in the price paid per point. Okay, again, last week's zones. But look what happened here yesterday. Price came down to last week's zone, found good support, which sent it back up to the zone overhead, where it consolidated for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Almost an entire session. We started at 2100 hours last night, and we didn't break free from that until 10 a.m. this morning. Okay. This is the Dow. We said to consider being long at or above 27025, which is, swing high was 27040. So from 27025 to 27040, we got what, 25 points, which is $100 per contract traded. Where it gets interesting is on the short side at 26825, which is right here. Alexa, 26,825 minus 26,580.
This might answer your question. 36,825 minus 26 is 36,799.
Okay, well, we had a breakdown somewhere. Alexa, 26,825 minus 26,579.
26,825 minus 26,579 equals 246. Did that answer your question?
Yes. 246 times 5, please.
Thanks for your feedback.
Alexa, 246 times 5.
246 times 5 is 1,230.
All right, $1,230 per contract. That's what the market made available. Okay?
I'm not quite sure how to help you with that.
All right, thank you. So, what we offered was an entry, a place to consider being short. That place being 26825. Price, we've got one little green candle there, a little bit of a green candle, but pretty clear the market's falling. Now, something that a lot of traders struggle with when they're getting started, because you get stopped out a lot. So anytime you've got a little green on the screen, it's very tempting to just, do a pirate thing, is smash and grab, just grab something so you go home green for the day. Now, I'm telling the truth, but think about it. You might have went home with 20 red points yesterday, but somehow you've managed to rationalize and compartmentalize that. Today's a new day, so you get 2 green points up on the screen. Smashing, grab, and go home green. Well, it's not fancy math to figure out that over time, that's going to seriously erode your war chest, your trading account. Why is it that we'll stay in unprofitable trades far longer than we feel comfortable staying in a profitable trade? Just part of the human condition. So this is an area where you have to train yourself. You have to learn to override your feelings and your emotions, because you feel like just taking those points and going. Now, there's nothing wrong with having a goal, reaching that goal, being done for the day. That's exactly what we teach. But if you've decided to go discretionary and you were down 20 points yesterday, going home green always makes you feel good, no matter what tragedy is in the past. But the math over time won't work. So how do we stay in something like this? We're in a perfectly good trade. Price is dropping like a rock. Price approaches this zone here. Buyers step in, drive it up. So you triggered in here. You're feeling real good about life right here. But then as buyers start to drive it up, what happens? You clinch. You know what I'm talking about. You do. And you probably exit. Unless you've trained yourself to not respond to your feelings and emotions. We have a tool that will help. It's a multi-tool. We use it for everything. There we go. The black squiggly line is a step line. As long as it's on the left side of a red and falling CFMA1, the place to be is short the market. What will happen at some point when the market finds support, and it will find support because the price becomes attractive enough that more buyers step in than sellers. It can be a combination of two things. Sellers here have a tidy profit. So as buyers show up and start nibbling, and some of the short sellers start taking their profits, order flow dictates support. Then we get to see who's more committed to their position, buyers or sellers. So those are the little battles that you see staged on a move like this. What we're waiting for, what CFRN traders are waiting for, okay? Now with $1,230 per contract traded on the table, do you think anybody's waiting around for anything? Or did they all just cash their check and go home? Some did, and that's okay, because it's discretionary trading and you get to make decisions and you can do what you want to do. As long as what you do is the result of cool, calm, calculated judgment, and not your emotions running willy-nilly. So as the market finds support, this step line is going to hook a right turn. It's going to definitively cross over. You see how every time it comes back to that red and falling CFMA1, steps over and then steps down, steps over, steps down, steps over, steps down. What's going to happen here at some point, when we're done dropping, at least temporarily, it's going to hook that turn. It's going to step over, and instead of stepping down, it's going to take another step over. When it has crossed that red and falling CFMA1, definitively crossed, and we have a green candle close above that step line, that's what we call the exit signal. Now, our exit signal cannot get you out at a swing high or swing low, because no one knows it's a swing high or swing low until after the fact. Not man nor machine nor algorithm or anything else. Now, anybody can get lucky. In fact, that's really the only way to get out at a swing high or swing low, is just by luck. I got out there and that's where the market happened to turn. Okay? All right. If it were to turn right here, and if the next candle were green, what we're waiting for is that close above the step line after it's crossed over. Okay? Let's see. I'll show you what one looks like. Find a good move with a turn in it. No, there's one. Okay, right here. Step line on the left side of that red and falling. Let me open it up a little bit. There we go. You can see it better. Just like what we were looking at currently, this is what happened a few days ago. We're falling on that left side. Now, notice what happens here with your candles. They start to walk sideways. That's part of what you're looking for. But what you're really looking for is here. See how this step line, see, it stepped over and then stepped down, stepped over, stepped down. But here, it stepped over. But when it stepped down on the other side of that red and falling CFMA1. And then it stepped over again. We crossed right there. So this candle would in fact, let me blow it up a little more. That candle did not close above the step line. You could still take your exit there if you wanted to. But the qualifying candle would be this one, right there. It closed above the step line after it crossed over. Now, did that get you out of the swing low? No, it never will. It can't. But typically, on an extended move, it'll get you out pretty close, in the neighborhood, okay? And that's good enough for me. So we'll continue to watch this, monitor this. You can always get out at some fixed number. In fact, in the live trading room, we teach you to have a hard target, because we want you to go through the entire process many, many, many times in sim before you ever think about going live. I want you to enter, manage, exit, the whole thing, and learn to spot it yourself, of course. Instead of using a fixed number with the discretionary or a percentage, we actually look to the chart. We look to price We look for the structure of the market to tell us this move is running out of steam. Do you ever get a false signal there? Sometimes, but it's usually pretty accurate. Again, it's not going to get you out of the swing low or swing high, but it'll get you out in the neighborhood. Okay, so the S&P went fine, the Dow went fine. Let's see what the Russell did. Here's the Russell. There's the Russell dancing to the beat of a different drummer a little bit early on. See how I ran up, and now these are last week zones. So it reached up, touched that zone from last week, reversed, and, well, you see it. Consolidated a bit here, about 6 5-minute candles. This is a 30-minute candle. Concierge Trade Alert for the Russell. Consider being short, 1526. So right here. Important prices, important areas are almost always tested. So if you go back through and look at each one of these that I've shown you, on some you'll see an example of that. Others, especially on a day like today when there's heavy momentum either downwards or up, you'll see multiple tests of that trigger. Watch yesterday's show. We had a bunch of them. I think it was yesterday. All right, so 1526 down to 14. All right, so it's 26, about 29. It's just shy of a $1,500 per contract move. Now, it works exactly the same in that put 2 lines on your chart. The other line is at 1532. So 1532 gave you a 10-point move to the upside. That's $500 per contract traded. And then this is two-sided action, a $1,500 per contract move to the downside. Hey, Alan, could you look at the daily 6S? Kevin says he lost sound. Anybody else lose sound? Or can anyone else hear me? How about that?
I'm good here.
Okay. David says no, he can't hear me. Ha, that's pretty funny, David. Good one. Okay. All right, everybody else says they can hear me. So Kevin, maybe you could type him a message. Would you please, Val? All right. Thanks, David. So it's something on his end, I guess. Okay. So here we are back to the Russell. Thanks, JT. Appreciate it. Okay. All right. So we've already talked about the Russell. Two-sided action. Just put those lines on your chart. Keep in mind that whatever happens between those two lines is just the market making up its mind. Next, we'll go to gold. Gold. Last week's zone to last week's zone. Failed to make it back up to the zone. Consolidated again here at the zone. Dropped to the zone. Consolidated. Bounced. Reached the BBC, which we expect to be good resistance when we approach it from below. It was. Sent us down another leg. And the buyers and sellers, they duked it out right here inside of this weekly zone. 1472/73, last week's zones. They were above and they were below. And then you can see what happened. Now, last night's concierge. Gold. It's a short, 1469. So that was here. $14.69, and we put in a swing low down at what, 65. So that's a $400 per contract move. Consider being long, 1490. We're just approaching that area right now, passing through 1490, and a swing high up there of 93.5, so that's a $350 per contract move. Okay, we got two more here. NQ and Crude. On the NQ, consider being short 77.49. We got a swing low 76.91. Alexa, 77.49 minus 76.99.
7,749 minus 7.
I guess that's 41.
Is 50.
Oh, 50, okay. Fair enough. All right. $20 a point, $1,000 per contract traded. For the 10 contract trader, this is if you've earned the right to trade 10. It's a $10,000 move. True story. On the long side, 77.98. So 77.98. Oh, this would be one where if you had multiples, 77.98. So we triggered, and from 98 we ran up to 21. So that's a $400 per contract move. And this one ran up to 78.41. It's about $800 per contract move. Okay, we have one more Crude, and then I'm going to take a look at that for you. Crude, again, these are still last week's zones. On Crude, they're being short 53.80. $53.80, and the swing low so far, $53.22. So that's over $500 per contract traded, and there's no exit signal. Not yet. Two things our traders are looking for. They're looking at the next zone below to see if that's going to be good support. That in combination with this step line crossing over, and in the first green candle that closes above it, after it crosses over, that exact price is the exit signal as we teach it. Okay? All right. That was Concierge, based on previous price behavior. I'm not going to break down each individual logic trade, but I am going to scroll through the week. We're on week 61. We start Sunday night, 6 p.m. Eastern. If you missed yesterday's show, you can go back and watch it at youtube.com/CFRN. We talked about each one of these in detail yesterday. Thumbs up means price found its target. All those were Sunday night. Here comes Monday. Here comes Tuesday. That's our week so far. Now, again, when I showed you the results for this week so far, earlier in the show, 5% have been stopped out so far this week. Our average over the past year is 20%. So, getting stopped out is just part of trading. There's no avoiding it. There's no getting around it. You just have to accept. And I know somebody out there says, well, I'm not going to accept that. I'm going to find a way. I'm going to find some filter. There's something out there that can tell the future. Man, that's a lonely, futile search. Actually, it's not lonely because there's a bunch of people out there looking for the same thing, but it just doesn't exist. Go read Genesis. When God put Adam together, He did not include the ability to change the past, know the future, and the two are inextricably linked for eternity. So save yourself some time and treasure by not looking for what, based on God's law, can't even exist. Yeah, but man's clever now and he has computers. Adam didn't have a computer. Yeah. Well, Adam had a relationship with God, and look where that got him. So what do you think these computers are going to get people? I'm just kidding. I won't play heavy-handed Bible theology with you. But just really think about it. Because if you're on that journey of looking for that one thing, man, painful and expensive. And I already know what your results are going to be. Because we tried. Oh, did we try? Spending like drunken sailors, boy. Ooh, look at that shiny indicator. Let's give me 2 of those. But you only need 1. I know, but I'll take 2. That kind of thinking will get you nowhere fast. So, but I'll tell you where we're going right now. We're going to take a look at the 6S. So Swiss franc, okay. We will look at the Swiss franc. Special request. 6S. And because we recently rolled to the December contract, that's why you don't see a lot of activity recorded back here. First thing my eyes drawn to is just this. Now I'm going to highlight that trend line by left clicking at one time. I'm going to go Control C on my keyboard, and then I'm going to go Control V, and it's going to drop an identical line, the exact same angle. So when you grab this one by left clicking and just holding it, don't grab it from the end. You grab it from the end, you'll change the angle, and you want it to be identical so that you are able to create what's called a price channel. And don't worry about getting it exactly perfect. Just get the, just get the idea. This is a daily chart. So there's a lot of information here. Bottom of the channel to the top, to the bottom to the top, to the bottom, couldn't quite make the top, back to the bottom, back to the middle, back to the bottom, back to the top, back to the bottom. Technical Analysis 101 will teach you that when price returns to the middle of the channel, it becomes a 50-50 shot if it's going to go to the top of the channel or the bottom of the channel. Right here, if price can rally up out of here, that's going to be an area of potential resistance, as will this, as will this, as will this. It is a set of stairs, obstacles. Now, those only come into play if we can overcome the top of this channel. If we break out of this channel, look for a trader Vic. That's where price comes back to just the top of that channel before it takes off to the upside. Once it does what I just said and takes off to the upside, this is your first obstacle, second obstacle, third obstacle, fourth, okay? Based on a daily chart. Now, what price? Swing high here, 1.0230. All right. Now, we're going to clear the deck and drop down to a 30-minute chart. Now, let's figure that number we just wrote down, 1.0230. See, that's way up here. We just went from a daily chart to a 30-minute chart, okay? Now, first thing I want to see is where are we in relation to this big move to the downside? So I'll grab my fib tool. I'll go from the swing high down to the swing low, we just popped up over the 62% fib. On the way down, this area acted as good support 1, 2, 3 times. Just so happens to line up with the 62% fib. We traded up to it. We got above it. It now appears that we're holding that area on a pullback. This is the exact thing I would want to see. Above the 62, pull back to the 62, find good support, printing a green candle. Now here's the dilemma. Coming up. There we go. One of two things is going to happen. Price runs to the upside to where we had the bearish cross and finds potential resistance. Or we pull back to connect with the BBC. Window of opportunity here. This is the first step. When you get to this area, that's a spot that may send the market back down again. So if we can overcome that, if price can get above that obstacle, as it got above the 62 and hold it on a pullback, then the next window of opportunity is right there. And if price can get above that obstacle and hold it on a pullback, now let's do this. I'm going to the continuous chart. Can't trade off the continuous chart, but it's good for charting purposes. Allows you to pull in more data. Okay. We have another important area right there. So here's what price has to do. We hold this pullback at the 62. We take out this swing high. Opens the door for a move up to this bearish cross. If we can overcome that, here's a second window of opportunity. If we can overcome that, hold it on a pullback. Big window of opportunity. But it reduces that window by a bit. Remember, the price that we calculated on that daily chart is up here. On the daily chart, that appears to be a reasonable place that price could trade up to, which takes us right up to this previous swing high, established September 24th. Remember, we're on the 30-minute chart now. Alan, did that help? Okay, got any other questions, Alan? Yeah, Bill, this is just a template up here. It says soybean tab, but yeah, pay that no attention. But thank you for pointing it out. I'll fix that. I had a soybean chart up one day, and then I built a bunch of templates off of it, and I forgot to remove that. But thanks for pointing it out. Okay, Alan, well, good. Glad I could be of service. I know the last time you asked me to do that, I kept saying I was going to do it the whole show, and I spaced it out until right after I signed off, and then my apologies. Feels like time for the good word for the day. Let's do it. And again, if you have any questions about anything, put them in the chat box and I'll answer them before I go. Okay. Prayer. Matthew 6:7 says, when you pray, don't babble on and on. I think a lot of us carry a guilt trip around about prayer. We know we're believers. We know we're supposed to pray without ceasing, day and night, but we never quite feel like we do enough, right? Or maybe we feel like we don't connect. You see, we're going back to that place of feelings and emotions. If you live your life based on how you feel, well, you know that's troublesome. But switching gears and living your life, logically, well, God, that just sucks all the fun out of it. It doesn't have to. But prayer is important. But stop. How about this? Stop guilt tripping yourself and just pray more. That's simple by design. Yeah. Okay. Here's what Jesus taught about prayer. If there's anybody that we should turn to figure out anything about anything, especially prayer, I think it would be him. Jesus said, when you pray, don't babble on and on as the Gentiles do. They think their prayers are answered merely by repeating their words again and again, like some kind of incantation, like you're casting a spell or something. Stop that. Jesus, he said it right there. Don't do that. And then he went on to give us some specific instructions on what we are supposed to do. First, he says in Matthew 6:6, shut the door behind you and pray to your Father in private. This way you're not trying to impress anybody. Not Miss Jones up in the choir, or Mr. Smith down at the end of the pew, or the preacher, because he got one eye cracked peeping around after he tells everybody, bow your head and close your eyes. You ever look up to see who's peeping around? Of course you have. Now, and I think you know what I'm talking about. You either know this person or you are this person. When you're in a group setting and somebody says, who wants to lead us in prayer? Some people will jump up. Now, that's not a bad thing, depending upon the motivation. If it's because you're prayed up and you just finished talking to Jesus and you still got a couple more things you want to say, you can't hold yourself still. If, on the other hand, you jump up out of your chair and say, I'll do it, because you want to impress your peers or the preacher or anybody or whoever, then you need to check the motivation. So good advice, so that you don't encounter this problem. I'm not saying you can't pray in public. I'm not saying you can't pray in church. But what you should practice is shutting the door behind you and praying to your Father in private. It's just you and him. Not going to get any brownie points from the pastor for this prayer. Right there, that's making a statement to Jesus that you find him important enough that you're going to set aside time and go off to yourself just like he did. We read about that several times in the New Testament. We talked about it just yesterday, I think. He would break away from the crowd, go get some rest, and pray. Now, prayer can wear you out, or it can refresh you and restore you. Which do you think's better? Which kind of prayer do you think Jesus would encourage you to pray? The second thing Jesus taught us in Matthew 6:8 Your Father knows exactly what you need, even before you ask Him. Heartfelt prayer isn't meant for human ears. It's between you and God. In heartfelt prayer, the Holy Spirit brings to the surface things you've carefully hidden from everyone else, maybe even yourself. Like a mirror, He confronts you with the truth and demands that you confess the hidden things of dishonesty. That's 2 Corinthians 4:2. Once you've done that, you can leave God's presence clean, corrected, confident, crystal clear what His will is for you and your life. Nothing fuels heartfelt prayer like a real need. It causes both the prominent and obscure to acknowledge this: God, without you, I can do nothing. Indeed, anything I could accomplish without you would mean nothing. This is the place of naked prayer. Hannah was there when she cried out to God for a child. She was so passionate that Eli, the high priest, thought she was drunk. 1 Samuel 1:13. But God heard her cry. That day, Samuel was conceived in her heart, and shortly thereafter he was conceived in her womb. So don't leave the place of prayer until you conceive, until the embryo of God's purpose for your life starts to take form within you and your vision is born. That's our good word for the day. It ties in with a little something I posted last night. I'm going to share that with you, and then we're going to wrap it up for today. Most CFRN traders have financial goals that reach beyond simply creating more wealth for themselves. If you drop by any of these trading forums or communities that you find on the internet, you'll find people talking about trading for a living. Let me point out also that most trading forums, most trading websites that offer any kind of a chatterbox or whatever, you're going to think there's a wounded animal in there. I never heard so much moaning and groaning and carrying on in all of my life. It's depressing. And I'm going to just tell you, if you hang out there, you're going to get drugged down. You will get drugged. You'll become just as miserable as they are. Now, I can say, because it's open to the public, anybody that's in the sound of my voice, you can come and hang out with us in our alert trial discussion group and hear something very, very different. Now, our traders do like to talk about trading for a living, but with a twist. In our community, the phrase often refers to someone else's living, not their own. Of course, everybody wants to generate wealth. Some of us so we can upgrade our zip code. Others trying to put their kids through college. Some of us simply want to make sure that retirement is something we can look forward to and stop hiding from. Now, in that regard, our traders are just like everyone else. But if you listen closely, you might hear a zip code that sounds foreign, or a school you've never really heard of. Lean in real close. You might hear a retiree talking about the 300 meals they'll be serving this week, or the well they're about to dig, or a school where there is no tuition. As a community of believers, most here are aware they were created for a purpose greater than themselves. Some are just awakening to the fact. The fact being, we are all created for a divine purpose. Wherever your destiny takes you, whether it's down the street, across town, or around the world, you quickly learn ministry costs money. And frankly, it's a bit awkward at first. Your slate's been wiped clean. You're brimming with ambition because the whole world out there needs saving. And you're broke, or worse. If you come to CFRN, if you show up on our doorstep, we have to assume this about you. Number one, you're probably a believer. And in your search for revenue, cash flow, income, whatever you want to call it, to fund the ministry God's called you to, somehow Emini Futures entered into the picture. Because that's what we do. Emini Futures. Now, it's unfortunate that 9 out of 10 new aspiring traders fail. Not just in Emini Futures, stocks, options, whatever. 9 out of 10. A 90% failure rate in any field of endeavor. It's almost unbelievable. Sadly, it's a well-documented fact, much like the divine call on your life. If Emini Futures is indeed the path you've chosen, please understand, the 9 out of 10 I just spoke about all had one thing in common: no teacher. Now, most rational adults would not attempt to fly a plane, do minor surgery, or even fix their own plumbing without proper training first. Right? So the only logical way to become the 1 out of 10 is find a teacher. Not just a teacher. That teacher needs to be a coach and a mentor. If you want to shave years off the learning curve and save tens of thousands of dollars, well, you're going to learn pretty quickly. Not having a teacher is way more expensive than actually having one. And you may already be aware of that. This is why we offer a 5-day free trial. No credit cards required. We want everyone out there who has common goals and desires. We want you to learn what it means to have group training and one-on-one training. And we foot the bill for a week. We want everybody out there who has an interest in trading Emini Futures, we want you to learn what we do, how we do it. And a week from today, if you go to eminitrainingschool.com right now, a week from today, you'll be able to make a well-informed, intelligent decision whether or not what we do is right for you, and if what we do has the potential to fulfill the need that you have in your life to fund ministry. What it comes down to is it worth the investment of time and treasure to have someone teach you how to trade? Only you can make that decision. But in 5 trading days, you'll have the answer on me. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. and I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.